Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Welcome to the podcast. I'm with Klug, who is a tax attorney with EKSV Legal in DC. Thank you for being my guest today, Chris.
Thank you for having me, Gary. I'm glad to be on.
Thank you. What made you decide to get into being a tax attorney?
Well, my father was a tax attorney, so growing up when he had some side projects, I could do some research in college and worked with him. And when I got into law school, I took a tax course and I liked it. And what I found with tax, once you learn the rules and you can kind of think it inside and out, when people start talking about various business transactions, you kind of run the tax implications in your head. And to me, it's fascinating. It's kind of like every kind of transaction is a puzzle. There's no one kind of right answer to everything. And so once I learned all the rules, it was very intriguing to kind of look at a transaction and try to research and come up with the best result. And so I've really enjoyed that.
So is there any particular specialty that you have in tax?
Yes, there is. So I have a strong background in all areas of tax. I would say I was a tax professor for about a year and a half, and really got down the rules for corporate taxes. But my kind of niche practice is international tax, both at the corporate level and with individuals. And with that, and my estate planning background earlier in my career, I'm also really good with international estate planning and how a foreigner should invest into the U.S. and likewise how U.S. companies and individuals should invest outside the U.S. And again, it's not just knowing the basic C Corp or the corporation tax rules, the partnership rules, because the U.S. adds all these complicated rules on top of it once there's a U.S. owner of a foreign corporation, and structuring makes a big difference from a tax standpoint. And so I'd say I have a good niche practice in the international arena.
Okay. So, knowing what you know now after these years, if you could go back to when you first started out, what do you wish you knew then that you know now?
It's a good question. I've taken 6 bar exams, and since I focused in tax, I never go to court. So I have 6 licenses, and I'm not sure how much I need them. So I spent a lot of time, the one thing I think now that I've focused my career, I've combined with other firms, and professionals all around the world. That's one of the ways I get my international clients is I have an international network of accountants and lawyers from around the world that I took time to meet and really work on. I think when I was young, first starting out, I thought I needed to know everything. So real estate, I had to know all the rules about real estate law as well, family law. And, you kind of spread yourself thin, where now I'm very comfortable focusing on tax. And when I have areas that jump outside of my practice area, it's better to coordinate with other professionals. It's a great way to develop referrals. I work with someone that does real estate. When they have a tax project, they come to me, and you kind of stay in the area that you enjoy working.
Okay. What are some of the questions that clients should be asking you that they just never seem to ask?
Yeah, especially in the international arena, there's just a lot of traps. A lot of, especially individuals, they don't think that, okay, I'm going to open an account in, let's say, Germany. What kind of reporting implications does that have in the U.S.? And the true problem in the international arena is it's not that having an account in Germany creates necessarily additional income tax, but not reporting the accounts properly have significant penalties. Similar with a corporation and owning a corporation outside the U.S. And they just don't think about that. A non-U.S. retirement account retirement account owned by a U.S. has some implications as well. The IRS recently changed it because they were heavily penalizing people. But to me, when I talk to a client who's either investing into the U.S., so a foreigner, a company or individual investing into the U.S., or vice versa, a U.S. person getting assets, they really need to get advice before they make those investments, and they always do it afterwards. For instance, I'm working with a family from China who's already moved to the U.S. and they have $300 million in assets. We could really load up a trust before they got here, and that would save them from about 50% reduction in estate taxes at every level of their generations as it goes on. And so you have a nice, and with my programs I'm able to pretty quickly kind of demonstrate that, yeah, I mean, if this grows at X% and you can avoid estate tax on that 300 million of wealth, this is what you would end up. If it hits every generation, you have significantly less. And it's just, everyone's in such a rush, the world moves fast, that they overlook the tax implications, and there's a lot of opportunities for tax savings out there.
Yeah, I run into that quite often. Somebody after they have the transaction or after they do something, they bring it in. It's like, oh, here, you got to fix this now.
Yeah,
so,
it's called pre-immigration tax planning for a reason. You got to do it before you get here.
Right, exactly. What are some of the of your clients' biggest fears, and how do you help them overcome those fears?
Yeah, so with the individual tax compliance arena is an easy one to illustrate, where a lot of U.S. citizens, a lot of my client base has been U.S. citizens that live overseas, not knowing about all these international information reporting forms. And a lot of times, if they're not directed to me initially, a lot of professionals like to really scare them that, this can have jail time because you missed this form. You can have these huge penalties, and then they try to rack up, the fee to help you out of this is going to be some exorbitant amount. Now, that exists, but it's more for the person based in the U.S. who purposely evaded taxes, stuck money overseas. That's why there's these huge penalties. So the IRS has compliance programs, and a lot of times I can put the clients at ease because they've been scared out of their mind about what could come. And the fact that I can tell them I've worked with a lot of clients, with their CPAs to bring them into compliance from the legal standpoint, and let them know that they're not going to incur the huge penalties. And for the clients that actually live in Europe, a lot of times their taxes are higher than the U.S. They don't end up owing any U.S. taxes. Like, are they going to throw you in jail if you don't even have an income tax liability? No. For companies, it's again kind of walking them through any treaty considerations, letting them know that we're setting it up. Your foreign company is going to own this U.S. company, why we're doing it, how they can get money in and out. And that's one of their big concerns. There's a lot of times a big misconception that, if I put money in the U.S., then it's subject to income tax. I don't want to do that. That's true if there's investments. If you're a foreigner or if it's a foreign owner of the income, there's a lot of benefits. For the most part, no capital gains in the U.S. are subject, that foreigner would be subject to tax on. But at the same time, it's not the gross amount you stick in the U.S. that's subject to tax. It's just income. So you're not losing money. If you're being subject to income tax, it means you're making money. So it's running, especially in the Middle East, they're not used to paying income tax, and there's a lot of misconceptions of what that means and how it works. So those are the questions I deal a lot with clients, and then it's always nice to show them how bad the tax could be, and then show them the way I do it, they're going to save some.
Right. So looking at it based on, you're dealing with a U.S. Citizen that is dealing with, either companies or investing abroad versus foreigners that want to invest in the U.S. I mean, kind of which one's more difficult? Which one do you like working with more, or does it really matter to you?
I really enjoy working with both of them. It's kind of a different setup from tax implications. For the foreigner investing to the U.S., especially the private individual, it's kind of incorporating the estate planning aspect with the investment into the U.S. If they own real estate in the U.S. directly, then they're subject to the Foreign Investment Real Property Tax Act. But if they form a shell corporation that's outside the U.S., and they can avoid, sorry, I meant to talk about the estate tax. They can avoid the estate tax on that real property, and then you got to think about all the income tax implications. And for the U.S. citizen abroad, unfortunately for them, but let's just say a U.S. citizen living in Germany who has their own medical practice that's a corporation for U.S. tax purposes, you essentially got to create a U.S. corporate tax return that's an informational filing on their individual tax return, run through these subpart F rules, more of these, even though it's in a corporate shell, there's flow-through rules where income is reported by the U.S. owner. It's very kind of fascinating from a tax reporting standpoint and running through the income tax implications. I don't think my clients like it as much, but if you're someone that likes the tax rules, it's fascinating how they make the variations off the typical corporation rules. Unfortunate, again, to that person, because he probably pays more to have, to go through the U.S. tax implication than he does for the German.
Right. What, in dealing with all of this, people that have been audited for whatever reason, what are you finding is the biggest thing that they're being audited for?
So as far as the audits go, typically I like to get to them before they're audited.
Well, of course.
But if there isn't, the audits that do occur, a lot of it is not correctly reporting under the controlled foreign corporation rules, for example, and this income should have flown through. There's issues with foreign tax credits, so that you can imagine that first the doctor I was talking about in the U.S., they have their own German taxes to pay, and the mechanism to avoid double taxation is foreign tax credits, and it's proper computation of the foreign tax credits, and so the foreign tax credits is a big issue I see with the audits. Missing the FBAR filing is a big issue with the audit. So, sorry, FBAR is foreign bank account report. So if you have a bank account outside the U.S., you have to do this report. And it usually comes up when the person is being audited for something else. Oh, so so they're looking maybe into the person's partnership return, and then they go, well, do you have any foreign accounts? And a lot of people don't know about the reporting obligation. And then the IRS goes, well, look at about these huge penalties we can stick on you for not doing that report, which can be $10,000 per account per year for 6 years. And notice I didn't say how much the balance in the account. That's for innocent non-filing of the FBAR. And so my experience what the IRS tries to do when they catch that, even if the person is somewhat innocent, they have a reason to have a bank account there. We're not talking the Cayman Islands, is that they use that as kind of a stick to say, well, we'll hit you with all these penalties unless we kind of agree on this point. And so so being in compliance has a lot of benefits in this area.
Right. So with more and more people, moving to the U.S. and they become, they're born here. Their parents are the ones who immigrated here. They're born here, and they still have family that's living in a foreign country, and they pass away, and the citizen here is inheriting whatever from the grandparents. Is that something that you help with? Is that how best would that be handled?
Yeah, absolutely. So that person I think would certainly want to talk to a U.S. professional in that area that understands what happens when you inherit property from a non-U.S. person. First, you want to look at all the assets that are coming to that U.S. person to determine, do we have any of these controlled foreign corporation issues? Are there going to be foreign bank accounts we have to deal with at least for 1 year? Do they want to keep the foreign investments due to the, the tax issues in the U.S.? And then from a pure kind of estate planning, and I walk this through with clients a lot, it's not as difficult as you may think, because the U.S. Imposes an estate tax, not an inheritance tax. So we look to the person that they're inheriting from, and if that person, who's the non-U.S. person, determines whether there's any U.S. estate tax. So that U.S. person could inherit hundreds of millions of dollars of assets, and there'd be no U.S. estate tax on it. But you do have to file a special return, special form of your income tax return to simply put the value of the assets that you received. And I think if you conceptually think about it, the idea of the tax code is we want more assets in the U.S. to tax. So to discourage those non-U.S. parents from sending money to the U.S. to their U.S. children, you know, that impediment is removed. That yes, you can give them all you want as long as it's non-U.S. based citus assets.
Now, does the individual here have to worry about, you know, if they're receiving, you know, just say cash from their parents are sending them cash and it's over the $15,000 gift tax limit, does the individual here have to worry about it?
So we would look at the parents again. So the gift tax, you look at the person making the gift and they're the one subject to tax. And that's a very good point because it's a mistake that's made a lot. What ends up happening is invariably that those parents will open up a U.S. account and then they'll make the gift from the U.S. account. That since they transferred the money from a U.S. account in their names to the child, to their account, that would be subject to U.S. gift tax, and there's no gift tax exemption for non-resident. Whereas if they transferred the money, and I should say it depends on whether you think that's a tangible or intangible transfer. So the IRS has taken the view that a wire from a U.S. account to another account, it was in you know, like a technical advice memorandum, is a transfer of tangible assets, as if you dropped a duffel bag of cash at their doorstep and left. Whereas if that money came from an account outside of the U.S., not an issue at all. So the form and where assets are coming from makes a big difference. Another one I would point out too is a foreigner who owns U.S. stock can gift the U.S. stock and not be subject to U.S. gift tax, whereas if they die holding the same stock, it's subject to estate tax. So it's just kind of knowing the rules. They don't always make sense or seem like they go together. You know, you would think they'd be treated the same way.
So I guess hearing you and what you're saying, so are you saying a lot of this really comes back to just more reporting than it is actual paying tax when it comes to transferring assets in?
Correct. Yeah. So a transfer in this type of thing where we're talking about the parents in the foreign country is
right.
And again, there's a lot of traps for the unwary. So it's, you know, especially where significant assets are at stake, it's a good idea to contact a professional that knows how these rules work. Again, this is another area, I'm glad you brought it up, where clients do the transfers first and ask me what happened. And can we fix it? And I just, have to run through everything with them and say, no. Now, what they do on their tax returns, I don't know. I tell them what they need to do. Right. A lot of people are honest and want to report correctly, but I'm sure people who've gotten my advice run off and just, you know, don't do what they should. But I don't say a lot overstating it, but you know,
sure.
They feel like they get a mulligan, I should say, that they didn't know the rules. So now that I know them, I'll do it right going forward, type of thing.
Right. Yeah. So that was kind of going to be my next question. It was, you know, you being the advisor for somebody, obviously, you know, you want them to come to you, you know, ahead of time. If they come to you, you know, this type of an issue, how long is the process from kind of the time that they come to you to the time, you know, it's clear for them to, you know, transfer the money or whatever it is from someone in a foreign country?
Yeah, absolutely. That's a good question. If we're talking about kind of the gift tax type of scenario, that's quick because I can just say, where are the assets, what are we transferring, and how's that transfer occurring? And then I can say, well, instead of it coming out of a U.S. account, we can avoid any implication of gift tax, send it from the account, let's say in China. And if it's, you know, depending on what the assets are, you know, just focusing on what they're transferring and going through the rules with them. So for me, that's not a big part of it. Now, again, if you're going to transfer significant assets to a child, you know, millions of dollars or whatever, you want to do it in an intelligent way. So why would you give it to the child outright, where they can form a trust for their child? The child can be the trustee, the only beneficiary, and that trust can be asset protected, protected from divorce, protected from any creditors, and you can make it into one of these generational trusts where it's not getting hit at estate taxes at every level. So there's a kind of two parts. The basic gift where there's not really, the child has no real estate tax implications, to the basic gift, or to the large gifts where you want to do more sophisticated planning because you want to protect the wealth. Right.
What so what's your ideal client right now? What does that look like?
I have a couple of buckets, I would say. So my ideal client on the individual level are clients with international assets or foreigners looking to invest in the U.S. Right now, I went to China late last year and did some presentations, and China, a lot of people are becoming wealthy there, and did a decent bit on asset protection trusts in the U.S. And for a lot of people who live outside the U.S., they're looking for privacy, they're looking for asset protection, and security of the financial markets. Now, none of the financial markets now are all over the place, but I'm getting a lot of clients who are wealthy and want to create these types of structures, and the U.S. right now is the place for privacy. We don't exchange information with other countries the way that we force them to exchange with us. And due to that, privacy is a big thing. And with clients from certain countries, part of the concern is they're not hiding assets, and I do a screening process to make sure I'm not dealing with someone who's trying to hide assets. It's for people who've legitimately made their money, but their concern is if we bring it back to our home country, could we be subject to kidnapping if people find out how wealthy we are? Could we be subject to government just saying, hey, we want 90% of your assets? So by having a pot of wealth in another country is a big deal to those clients. And then on the corporate side, it's really companies that have international transactions, and I really enjoy working out how to structure those transactions, whether it's U.S. companies going outside. So I'd say those are my key areas I'm working with right now, kind of the high net worth international client, and then companies with international transactions.
Yeah. So these ideal clients that we're talking about now, what's the first steps that they need to take, before they come to you, and then reach out to them?
Yeah, I mean, someone that has no U.S. connection or has no interest of having any U.S. investments or anything. I think first is to establish, do you have something that has U.S. implications, tax implications, or state planning implications? And then, the way I work is I look at clients. I like clients to come back to me on a yearly basis or periodically. So my goal is I don't demand an upfront fee for the initial conversation, right? I want to develop the relationship, tell them the rules, and I don't say you only get a half an hour to talk to me. To me, I want the relationship to be long-term. So I don't say, oh, your half an hour's up, boom, cut you out. And typically, the clients in this area have talked to a number of professionals already. When they come and talk to me, they kind of see the value. They understand that they can see that I've worked a lot more in this area than others. And it's, so I've developed, so as far as what they should do is establish that they have some kind of U.S. tax structuring issue that they need to work out, and then, come to me or another professional, but, get the information, don't do everything, and then come to us and say, how do we fix it?
Okay. What's the biggest challenge that you're facing now?
It's interesting because obviously we're talking during the time of a pandemic, but having an international client base, it hasn't affected me that much because I was already doing a lot of meetings through video conferencing, through the phone. A lot of work is, information through email. But the biggest challenge right now, we're learning to deal with it, but my team we're not in the same office space anymore. So it's dealing with how do we get the work done and how do we do it as efficiently as possible. And so that's been a different time. I think the other challenge is obviously people's minds are elsewhere. They're not thinking about immigrating to the U.S. Companies have put growth plans on hold because we're in uncertain times. What's going to happen? Obviously the business world is going to be a little different after, I don't think there's be exactly back to normal. And so, I had a couple of clients that were either having their companies acquired or they're looking to do mergers and acquire other companies, and they put it on hold because, if you're having your company acquired, they're going to look for a discount. Say, hey, well, you don't know what's going to happen. So my biggest challenge right now is kind of what's kind of coming through the pandemic and what we're going through right now with COVID-19.
So what would you like to share with our listeners that I haven't already asked you?
Well, what I would like to say is through the attorneys at our firm have come from larger law firms, and we can handle everything from corporate to securities work and tax. How we try to differentiate ourselves from the big corporate firms is that we're going to be really responsive to you. We're going to customize our work to kind of how we think clients want. If you have an emergency, you can contact us, and we're going to be right on top of it. We have the knowledge, skill of a big firm, but there's a reason we're not part of a big firm anymore. We like the boutique setting, and we think we can serve our clients better. For example, I'm allowed to give initial free consultations. And, we really want our clients to think that we're involved either in their business or in the well-being kind of their family. We're not here just to create paper, but we want to make sure we're doing the best for our clients and, make sure we're responsive and we're quick to get their work out at a high level.
All right. One last plug for your company. You have website address or anything that people can go to get more information on you?
Absolutely. So we do have a website, and it's eksvlegal.com. And the other thing you can know, we have offices both in Washington, D.C. and in Miami. And we have an up-counsel relationship with the firm in New York City. And we closely work with firms in California, and I'm licensed, like I said, in a number of jurisdictions. So we can get work done in a number of different areas.
Okay. All right, Chris, thank you very much for being on our podcast today, and look forward to working with you in the future.
Sounds good, Gary. It was great to meet you. I'm glad to be on the podcast, and certainly look forward to working with you in the future as well.
This show has been produced by Market Domination, LLC. To discover how you can have your own show completely done for you and turn it into a real published book and become the authority in your marketplace, go to www.marketdominationllc.com/podcast offer.